this computer. Okay. So this for the purpose of participation, some students say that they just speak along with the crowd, right? So in this case, I'm going to ask a question, so you guys raise hand, okay? So I will call you to answer questions one by one, instead of everyone, speak of the answer. So it's hard for me to know who has participated, who is not. Okay, for this question, so if I ask a question, just raise a hand. If you have a question to ask, you don't have to raise a hand, okay? You can just interrupt me. But if I'm asking a question, I will, ask you guys to raise a hand, so that I will give everyone a chance to speak, okay? So we were here, I think, last time. Okay, which of following is true about a normal costing system? So, okay, sorry. Here we were saying that we are saying we have two different types of costing systems: the actual versus the normal. In last lecture we talked about this. In terms of direct materials and direct labor calculation, there's no difference. Okay, but in terms of the indirect costs, right, the manufacturing overhead. So for normal costing system, we use a predetermined overhead rate multiplied by the actual quantity used for the activity base. Under this system, it's less accurate, but it allows us to provide a timely information. Okay. For the actual costing system, the factual overhead is calculated by actual overhead rate multiplied by actual quantity, right? So it's more accurate, but you have to wait until you have all the actual figures, okay? So that's what we talked about last time. So in this question, which of the following is true about a normal costing system? Okay. Rag?
D, direct costs are applied using the actual rate.
Yeah, indirect cost allocated user finite rate.
Cost, yes.
Yeah, that's correct. Thank you. Yeah. So now let's talk about, assigning costs to finished goods, okay, to finished goods. So when a job is finished, right, here is the job cost sheet. You can see that we calculate the total cost, right? What's the total cost for this job, okay? And then you figured out what's the unit cost. And then my question is, this is the total cost, right? This is the cost will be removed from the work in process inventory, right? So this one, okay, this one will go to finished goods inventory, okay? We'll go to the finished goods inventory. So the amount of the cost, right, for the job completion will be removed from the work in process inventory to finished goods inventory because the work is done, it's finished, okay? In this case, okay, if you see the picture, right, that the flow, we are using this direction. So you completed the job order, it's $39,000. That's gonna be removed from work in process inventory to finished goods inventory. Okay, so what's my journal entry for the 39,000? What's my journal entry? Did anyone? Okay, Isabella?
So would you credit work in progress inventory and then debit finished goods inventory?
Very good, good job. That's exactly the very true. Okay, so the inventory balance decrease. Okay, so you credit, and finished goods inventory balance increase, so you debit. Okay, does this make sense?
Yes.
Yeah. Okay. Good. So I just want to make sure I can see everyone. I don't want to miss anyone's question. Okay. So so the cost. Okay. So after the finished goods cost, what happened is, for those cost completed unit or jobs remain in the finished goods inventory, okay, they will stay in that finished goods inventory until it's sold. Okay, the minute this goods is sold, now the cost goes into the cost of goods sold, right? Cost of goods sold. We are assuming this is a perpetual inventory system, okay? If you remember back in 2100, we have, for inventory systems, we have two types of inventory systems, right? Does anyone remember? Perpetual versus anyone?
Temporary.
Tammy? Sorry.
First come for first in, first out, or
That's the cost. No, those are the cost model, right?
oh,
So I'm
okay.
asking the different inventory system. So perpetual versus
Is it
2100.
period?
Dan, what did you say, Dan?
Is it period?
Periodical, right? Periodical. Yeah, that's right. So perpetual versus periodical. And what's the major difference between the two? Anyone remember?
Perpetual should be every day, or it happens like frequently, but the periodical is within a certain period, maybe end of year.
Okay,
quarterly.
very good. Yeah. So for perpetual inventory system, for every sales transaction, okay, you keep track of the cost of goods sold, okay? But for periodical inventory system, you only calculate cost of goods sold at the year end, okay? After you count the ending inventory. Remember, beginning plus purchase minus ending inventory, that's your cost of goods sold, okay? 2100, okay? So that's the difference, right? So for perpetual inventory systems, every time there's a sales transaction, you have to recognize the cost of goods sold, okay? So the cost of the unit, they are sitting in the finished goods inventory before they were sold. As soon as they were sold, they will go to the cost of goods sold account, right? So here's one example. On January 31st, Violet's manufacturing sales job number 101, costing that is 39,000. They received $50,000 on credit. What is the entry? Anyone know what is the general entry for this example? Megan?
So I think 50,000 would go to sales, 30 debited to sales, 39,000 would go to cost of goods or credited to cost of goods sold.
Okay, so for sales, right? That's the revenue. Okay, you are pretty close. You are pretty close. Let's see, who is this? Sorry. Okay, James.
Yeah, accounts receivable gets credited 50,000 and sales gets debited 50,000.
Okay,
And
Erin.
then- okay.
Yeah, thank you, James.
I think accounts receivable is debited for 50,000, and then sales would be credited for 50,000, and then cost of goods sold is like debit 39,000, and then finished goods inventory credit for 39,000.
Okay, very good. And there's one more lady here. I don't know the name. I can't see the name. I don't know why. If you have a picture there, I can't see a name. Sorry, I don't want to miss anyone. So can you speak? Whoever has raised the hand, a minute ago. I haven't called your name yet.
I think it was Michaela.
Oh, Michaela. Okay, yeah, Michaela. That's right. Yeah.
My hand. Somebody else said what I was going to say.
Oh, Michaela, what's your answer?
Yeah, sorry, I just lowered my hand. Somebody else had said what I was going to say.
Okay, that's fine. Yeah. Okay, good. So the answer is correct, right? You debit accounts receivable for 50,000. You credit the sales for 50,000. Okay, so that's the sales. But don't forget, this is a perpetual inventory system. So you have to recognize the cost of goods sold. So you debit cost of goods sold for 39,000. You credit finished goods inventory for 39,000, right? This is something we learned in 2100, right? This is nothing new, okay? Nothing new. Okay, so now let's do a summary of the job order cost flows, right? We have used many slides, right, to work on each individual component. It's always important now, let's take the bigger picture, right? Okay, so now in this job order cost flow, I have 3 inventories, right? I have raw materials inventory, work in process inventory, and finished goods inventory, right? But I also have two clearing account, right? Factory labor and manufacturing overhead. Remember, at the end of the accounting period, these 2 accounts, the balance should be 0, right? These 2 are the clearing account. And then we have a cost of goods sold account. This is one, we actually sold some of the goods, right? So let's take a look. First, if I purchase the materials, suppose it cost me $42,000. So I debit $42,000, okay? And then suppose I incur the labor cost. So that's the 32,000. I debit factory labor. And suppose we incur the manufacturing overhead, 13,800, and then we debit this account, right? And now we used direct materials, 24,000, okay? So 24,000 direct materials will be removed from raw materials inventory and will be assigned to the work in process inventory. That's the direct material. The other 6,000 goes to the manufacturing overhead because this is the indirect material, right? Remember, we worked on this last lecture, right? Okay, are we clear so far? Mario?
Yes, Professor.
No, never mind. I just got it now.
Okay, Karen? Okay. Okay, so that's the materials, right? Similar idea for labor, right? So the total labor cost, that's the 32,000, and the direct labor is assigned 28,000 to work in process inventory. The indirect labor, that 4,000 goes to the manufacturing overhead, right? Okay. So now if you take a look at these amounts, how many of the we accumulated manufacturing overhead, the total, these 3 numbers together, it's going to be 23,800. Okay. And now we are going to assign manufacturing overhead to work in process, right? So suppose this amount is 22,400. Okay. So I credit manufacturing overhead, I debit work in process inventory. Okay. So now this leaves a balance of manufacturing overhead. The balance would be 1,400 under applied. Okay, 1,400 under applied balance here. And let's take a look at the work in process inventory. So now I have direct labor, direct material, direct labor, manufacturing overhead. Together, my total manufacturing cost is 74,400. Okay, and suppose I remove 39,000. Okay, what is this called? This $39,000. What is this called? I will try to give the opportunity to people. Oh, Nima?
Is that cost of goods manufactured?
Very good. This is the cost of goods manufactured. Okay. So so that 39,000, okay, removed from the work in process inventory because they are 100% completed, right? So these are the cost of goods manufactured. So now my work in process inventory balance 35,400. Okay, and this is the finished goods inventory. And then suppose I sold this this product. Okay, so I credit finished goods inventory, I debit the cost of goods sold, right? Okay, so my finished goods inventory is balance 0. Okay, so you see, this is the whole job order cost flow. Okay, I'm hoping that by now you have a very good understanding about what's the cost flow is like. Okay, does anyone have any questions about this?
I do. I just need a clarification on number 6. That's the 22,400.
Okay, so 6,000. So basically, this inventory contains both direct materials and indirect materials, and they used $24,000 direct materials and $6,000 indirect materials. Together, 24 plus 6, that's the $30,000, the total usage of the materials. Nima?
I just have a quick question for the manufacturing overhead. Do we close it out, or is that how it ends?
Yeah, I will teach you how to the methods to close the manufacturing overhead, because right now we have a under applied balance, right? And we need to make it to be 0, right? Balance to be 0. Yeah.
Okay.
Good question. Yeah. Anyone else have a question?
I had a quick question.
Yeah, go ahead.
So I know you described manufacturing overhead as a clearing account, and I think on the test said that raw materials account is a control account. Could you kind of just briefly explain what a control account is?
So basically what happened is this is your inventory, right? So these accounts, they are on your balance sheet, right?
Mm-hmm.
These are the balance sheet. These are the 3 inventories that you're gonna present it on the balance sheet, right?
Okay, yeah.
Yeah, sorry. How come? Just give me a second. And these ones, we use them as a temporary place, right? To keep tracking of the cost. And the purpose of this is we keep track of the cost incurred, and we have to assign them to this inventory. So we use this as just a clearing account, as a temporary account. The same idea from manufacturing overhead, right? You won't present these 2 accounts on the balance sheet, right?
Okay.
Yeah, good question. Yeah. So now let's compare the manufacturing company versus the service company, right? So for manufacturing companies, you have the 3 inventories, right? But a service company, for example, if I'm an accountant, right? If I provide accounting service, consulting service to my client, right? I'm not manufacturing anything physical goods. I'm providing a service, right? But we still can use job order costing to treat service companies. So in parallel, even though we don't have work in process inventory, but for the service company, we can have service contract in process. Okay, these are the service contract that you are still working on. It's not finished yet. Finished goods inventory, this can be completed service contract. Okay, so for example, a client came to me asking me to do their bookkeeping and file their corporate tax return, T2, and also help them to do the personal tax return, T1, okay? And I'm right now in the middle, at the year end, I'm still working on it. I'm not done with the job yet. I'm still in the middle of the process to do the calculation, to prepare the financial statements, right? To do the tax return. I'm not done yet. So that would be a contract of in process, okay? But for those services I have completed, those would be the completed service contract. The good thing is, by the time I finish it, it's sold, right? It's sold right away, because it's not like the other manufacturer business. You manufacture something, these things has to be waited to be sold, right? But for the service, because there's a contract, right? By the time you are done with the contract, you can be paid, right away. So in parallel, for service companies, even though they don't have the 3 inventories, but they have something similar. Okay, they can have these two accounts that are similar to the work in process finished goods inventory. Okay. Some of the examples would be service companies would be accountant, right? Professional, chartered professional accountant. This is like a hair salon, right? Hair salon. This is all the service companies. So for service companies, last lecture we talked about predetermined overhead rate. Do you remember that? How do you calculate predetermined overhead rate? Anyone? So Megan and Nima, I will try to give the opportunity to somebody who hasn't participated yet, because you have already participated. Unless somebody else cannot participate, I will. Okay, Kate.
The estimated manufactured overhead divided by the actual by the estimated manufacturer time hour.
Yeah, you are getting there. Divided by the estimated.
By the estimated annual operating activity.
Yes, operating activities that are selected for the cost base, right? We also call the cost driver. Okay. So for the service companies, right? For the service companies, so the major cost component is the direct labor cost, right? Is the direct labor cost. Materials, oh yeah. So if I'm accountant, right? I have to prepare the financial statement on papers, right? I will print it out, right? I will sign on it. I give it to the client. For sure, that paper costs me, right? That's the direct materials, right? But you can also argue that's the indirect materials, right? Because consider if I charge them, you know, $300 an hour, right? For a job of $15,000 and one piece of paper, how much that costs you, right? So you can see that for service companies, the major cost component would be your direct labor, right? Your direct labor. So you also can apply the overhead, right? My question for you is, what would be appropriate cost driver for this service company? Jamie?
I'm sorry, I was just going to ask if you could repeat that, just that last part.
Yeah,
again.
so remember, for service companies, right? You know, we are also going to apply overhead, right? But when you apply overhead, you have to first select the operating activity, right? Because that's how you calculate the predetermined overhead rate. So you first have to decide which operating activity I'm going to select as the cost driver, right?
Porque el otro día se pudo ver ahí.
Pardon me?
Nunca se pudo ver.
Okay, Karen.
Would it be the hours used?
Okay, good. Direct labor hours used, direct labor cost, right? This would be appropriate base, right? Yeah, very good. And the job cost sheet can be adapted to fit a service environment. Well, sometimes in most of the service, you know, environment, maybe you don't use direct materials, right? In terms of male haircut, right? You know, they don't have to apply any dyes, right? At least I don't dye my hair. I don't have too much hair. It must be a very easy job for them to do my hair. Very sad. Okay, so think about that, right? What's the direct material if they do a haircut for me? Nothing, right? They take away my hair, right? They didn't add anything, okay? They take away my hair. So in that case, in the job cost sheet, right? You probably don't need that column direct material, right? They didn't add anything to my head, okay? So that's the case. So then that's why we talk about the adaptation, right? Because the regular one we have seen have the three component. For service companies, maybe the job cost sheet does not need that direct material column. Yeah. Karen, is this a legacy hand or you have a new question?
Oh, I haven't put it down, sorry.
Okay.
I have a question. Sorry,
Yeah,
I just want to confirm. So
Yeah.
for your haircut, there would be no direct materials, but there would be direct labor and manufacturing overhead. So then we'll just calculate that. Is that correct?
Yeah, yes.
Okay, perfect. Thank you.
Yeah, because the hairdresser is gonna spend time, right? Whatever the charge of the rate and how much time. My hair is only gonna take like 5 minutes.
It depends on the color.
Okay. Actually, my wife did the job. So I have 2 boys at my home. So 3 of us. So my wife, she's doing hair. Yeah, she's the one to do the hair cutting. So mine is very quick. Yeah. Nima, you have a question?
Yeah, so for the haircut, with the clippers considered manufacturing overhead instead then?
Yeah, that's right. Because you have these machines, right? You have this equipment, right? If you do a amortization, depreciation, that would be a manufacturing overhead. Yeah, that's a very good point. Yeah.
Okay.
Yeah, eventually, you think about the usage of that the equipment, right? The longer the hairdresser worked on my head, right? So the longer they're gonna use the equipment, right? Therefore, the direct labor hour would be appropriate cost base, right?
Professor,
Yeah.
wouldn't it be like time consuming though to use like a job cost sheet in terms of a haircut? Like, would you use something else?
Yeah.
Instead?
So, yeah, actually, yeah. So I'm just using haircut as an example, right? So in the real time, in the real situation, depending on the business, right? If it's just a small business, they probably don't go this way. Yeah, the benefit doesn't adjust the cost, right? So
then would they just do it like just not use job cost sheets and then instead do like a general?
Yeah, if you visit a small regular hair salon, they probably don't use job cost sheet. Yeah.
Wouldn't it be based on like invoice? Like, wouldn't somebody like an invoice be kind of like a job cost sheet at that point?
The invoice is all about the sales price, right? How much they charge you.
Okay.
Yeah. And the job cost sheet is for you to understand how much it costs you. Yeah.
So would it still be worked into the accounting system somehow though, like without using physical job costing sheets?
Yeah. So in that case, so if I'm running a hair salon, maybe I will know the revenue, right? All the service revenue, and I know all my costs, right? So I have my depreciation. So instead of going to the complication of figuring out, what is the detailed cost of the service. So you just have 2. You actually only have 2, right? The revenue and the operating expenses, and then it's your net income.
Thank you.
Yeah, no problem. Okay, so job order costing. Advantage, you can see this picture is about accuracy, right? It's really about accuracy. So the job order costing, they have a better management on that job, right? So because they are focusing on the individual job, they can have more precise control in terms of the cost, right? So the disadvantage is you can see that the amount of the data entry, right? It's quite a bit of work, right? Quite a bit of work. And also the overhead allocation is not very accurate, right? We use estimation. So that's for the job order costing. Okay, let's work on this question. Okay, so take a look at this question and okay, wow, that's quick. Jimmy?
Hi, I would guess it's A, cost of goods sold.
Okay, the cost of items finished and transferred from work in process inventory to finished goods inventory is, okay, so anyone else?
Yeah, I think it's cost of goods sold as well.
Okay. So far, everyone raised the hand has already participated. So I'm trying to give somebody who haven't participated yet. L, who is L? There's a person with the.
It's me.
Oh, okay, yeah.
Yeah.
Long, yeah. Go ahead.
I think it's cost of goods sold too.
Oh, cost of goods sold. Okay. Thomas.
Sorry, my mic wasn't unmuted.
Okay.
Cost of goods sold. A.
Thomas.
A. Cost
A.
of goods sold.
Okay. Ruben.
Is it
It's
C?
A.
Ruben, what did you say, Ruben?
It's A. Cost of goods sold.
Cost of goods sold.
Professor,
Yeah.
I'm thinking it's the cost of goods manufactured.
Okay.
Unless I'm getting it wrong though.
Yeah.
I
Okay.
was also thinking cost of goods manufactured.
Yeah.
Okay.
I think it's C.
Okay. So let me see. Who think it's A? Who think it's C? Who is thinking this answer should be A? Okay.
I think it's C.
C. Who think the answer should be C? Okay, yeah, I think the majority got C. Okay. So the answer is C, right?
Yeah,
we are talking about
we got no sold it yet. Oops, sorry.
Yeah, okay. We are talking about from work in process inventory to finished goods inventory, right? So, you know, this is where when the goods are completed, right? But not sold yet, right? Not sold yet. So it's transferred from work in process inventory to finished goods inventory, right? You transfer the completed item to the finished goods inventory. So this is the cost of goods manufactured. When you sell the goods in finished goods inventory, that's when you transfer the goods to the customer. At that point, that would be a cost of goods sold, right? Okay, so reporting job cost data. So you are familiar with this cost of goods manufactured schedule, right? We have even a question in the assignment 1 to ask you to prepare a cost of goods manufactured schedule, okay? So basically you have a opening balance of work in process, and then you are going to add the 3 components of the total manufacturing cost. And it's very important that you know that this manufacturing overhead, this is not the actual manufacturing overhead. This is the overhead you applied, okay, based on the calculation. So this is the manufacturing overhead applied. It's not the actual one, okay? And then you have a total, so beginning plus total manufacturing overhead, you have total cost of work in process. And then you less the ending balance of the work in process, you get the cost of goods manufactured. So I just want to bring your attention to this. The manufacturing overhead here is applied, not the actual, okay? So the applied overhead, okay, is based on estimation. It's not exactly the same as the actual amount, right? The actual overhead, we can only know at the end of the accounting period, okay? So during the period, you are applying overhead, so that amount will be different from the actual, right? If the applied amount is more than actual, we are saying you over applied. If that amount you applied is less than the actual, we are saying you under applied, okay? How are we gonna deal with that amount, the difference, okay? There are 2 methods. First one, that's the common method called cost of goods sold method. So I already post a video, that's 2-minute video, okay? I created it yesterday. So make sure you watch that 2-minute video. You would understand, it's pretty straightforward, okay? So, and then the probation method, okay, that's the 2 method. So for the cost of goods sold method, this is the most common method. The difference is adjusted directly through cost of goods sold account, okay? So the rationale behind this method is that eventually all the product cost will goes to the income statement, right, as cost of goods sold. So if it's under applied, you debit the cost of goods sold. If it's over applied, you credit the cost of goods sold. Why? You can just watch the video. It's only 2 minutes, okay? So I'm not going to repeat myself here. The second method is called a proration method. So basically, this difference will be proportionally allocated among the 3 inventory. Oh, sorry, the 2 inventory and the cost of goods sold. Okay, because that's where the applied manufacturing overhead go, right? So think about that. After you apply the manufacturing overhead, it goes to the work in process, right? For those completed ones, that was transferred to the finished goods. For those items were sold, that goes to the cost of goods sold, right? So that's 3 accounts are relevant to the applied manufacturing overhead. So therefore, the difference will be, okay, proportionally allocated to the 3 accounts based on the ending balance of those accounts, okay? Based on the ending balance of those accounts. So this is not very common, okay, because you have to do a lot of calculations, okay? There are more effort will be needed. So I'll give you this example, okay? Let's take a look at this question. ABC manufactured, okay? This company has a 5,000 under applied overhead in manufacturing overhead at December 31st. Okay, so we have to deal with this because this manufacturing overhead has to be 0, right? And the ending balance for the 3 accounts, work in process, finished goods, cost of goods sold are 10,000, 50, 40. So if I add the balance together, that gives me 100,000. So then I want to know the proportion, okay? I want to know the percentage. So 10,000 out of 100,000, so this is a 10% weighting. 50,000 divided by 100,000, this is a 50% weighting. And the last one, cost of goods sold, is a 40% weighting. So I'm going to apply this proportion to that difference. The difference is 5,000, okay? So I need to deal with 500 to work in process, oops, and 2,500 to finished goods, and cost of goods sold, that's the 2,000. What's my journal entry? I have quite a few legacy hands here. So if you want yeah, so that it's gonna help me to know who has just raised the hand. Okay, so what's my accounting journal entry here? So if I have a $5,000 under applied overhead, what should I do to my manufacturing overhead account? Should I debit it or credit?
Credit the manufacturing overhead account.
Erin, what did you say?
I would say I will debit all the work in process, finished goods, and cost of goods sold, and then credit manufacturing overhead since it's under applied. Okay,
good. I asked you one question, you answered 2. Thank you. Okay, that's great. Yeah, so basically, because it's under applied, that means there's a balance sitting at the debit side, right? There's a debit balance sitting at the manufacturing overhead account. In order to get rid of the debit balance, we have to credit manufacturing overhead, right? And then you just have to debit the other ones, okay? You just have to figure out what should I do with the manufacturing overhead account? If I need a credit, and then I would debit the others. If I need a debit, and then I would credit the others, right? So I need a credit, the 5,000 manufacturing overhead, and then I will debit the 3 accounts based on their proportion, right? So 500, 25, 2,000. Kate, you have a question?
No, I just forgot to put it down.
Anyone else have a question? Erin, you have a question? No.
So how did you get 10, 15, 40?
10, 15, 40. Okay. So I'm going to use, so here are the 3 accounts, right? Work in process, finished goods, and cost goods sold. And at the end of the accounting period, they all have an ending balance for each account, right? So I'm going to sum them up to get a total number. And I want to understand each of the 3, what's the proportion, the ending balance. So in this case, work in process, the ending balance is 10,000 and the total balance is 100,000. So the weight would be 10,000 divided by 100,000. So that's the 10%. Does that make sense?
Yeah, it does.
Okay. Okay, so let's take a look. Sorry, Megan, and there are 2 students opening the camera. Kaylee, is that you? Okay, good. You have a question?
Yeah, it's okay if it's answered in your video. But in the slide that you just had where it said under applied debit, over applied credit.
Yeah.
Here, it's just confusing me a little bit, but is that answered if I watch your video?
Sure, yeah. If you look at the video, that'll be very clear in terms. And let me know if after you watch the video, if it still doesn't make sense, let me know, send me an email, okay?
Okay, perfect.
Okay, so now we have a question here. Suppose a firm has under applied overhead at year end. Which accounts are affected when using the proration approach? So Kate, you have already participated. I will try to, if you have participated, I will try to give it to somebody who haven't participated. So all 3 of you have participated. So who is this? Okay, who is this? How can I know? Boy, just give me a second.
I just raised
Kellen?
my hand.
Yeah, Kellen.
I think it's all of them, right?
All of them, very good. Yeah, because that's exactly the general entry we made, right? All of them, okay? Thank you. Okay, so that's the end of the lecture. So I'm going to stop record. Okay, so where is it? Stop share. And I'm going to stop